Ann Byer with Keller Williams Exton. We're a suburb of Philadelphia. And I'm pleased to have a chat today with Jason Ashe of Guaranteed Rate. And Jason's going to explain to us a couple of programs that can be super helpful to first-time home buyers. Hi, Jason.
Hey, Ann, how you doing?
Good. So the programs that Jason has told me about, one is called the Borrow Smart program, and another one is PHFA. So he'll go through them one at a time and give us some details. So Jason, tell us about Borrow Smart. What does that mean?
So Borrow Smart is a Freddie Mac first-time buyer program that is very specific to certain metropolitan areas, and Philadelphia being one of them. So it covers Philadelphia, Chester, Bucks, Montgomery, and Delaware counties. And it has excellent pricing as far as interest rates are concerned, but also you get a $3,000 grant to use towards down payment and closing costs. It has a income limit of $160,000. And with that income limit, there is some flexibility with what income we use and what income we don't use to try to get more borrowers into that program.
Okay, tell me what you mean by that. What does that mean?
Yeah, so let's just say, for instance, you have husband and wife each make $150,000. So combined, they're over $300,000. But if one of those borrowers, if we use their 150 and we leave the other one at zero, if they qualify under the ratios, we can just use one income.
So it has flexibility depending on the number of people in the household and what income they have.
Yep.
So are there any restrictions to that program at all?
So the only restriction is you have to have one first-time home buyer. So if, let's just say, husband and wife, the wife owns a house and the husband does not, she's on the mortgage deed ownership of a particular property. Say she bought it before they got married. As long as they're selling that current house, with the husband being a first-time home buyer, we can get them into that program. So as long as one borrower is a first-time home buyer and you don't own any other real estate at the time that you purchase the new property.
Fantastic. And if somebody was interested in applying for this program, how would they go about that?
So it's just as simple as filling out a pre-approval on my website. And then really it's one of the first things I look at when anybody I have is getting pre-approved is first thing to do, check and see if they qualify for this program, because $3,000 is $3,000 and you don't have to pay back that grant. It is a non-lienable grant. So let's say in a year, if the rates come down and it's worth refinancing for them, they can do so, and there's no repayment of any portion of that $3,000.
Well, what kind of credit limit does somebody have, or credit score must somebody have to qualify?
So it's really just the same as any conventional loan. So it's a 620 credit score. Obviously, it has to run through the automated underwriting system cleanly, but you can do as little as 3% down on this program, and you can put as much as however much you want to put down. You can put down 70%. There's no limitation on having a minimum down payment to be able to qualify for the funds.
So it sounds like a program that's incredibly flexible and pretty easy to qualify for. So that's awesome. So tell me then, the other program that we talked about is the PHFA program. That's a little different. Can you explain how it's different?
Yeah, so the PHFA program is through Pennsylvania Housing Finance Agency. So the big difference between that versus, say, the Freddie Mac program is in that program, it is a lienable second grant. So it's something that will eventually, there's no payment on it, but it's repaid over a 10-year period. I should say forgiven over a 10-year period. So somebody is $300,000 sales price. It's 5% of the sales price that you get in the grant. So in a case like a $300,000 purchase, it's $15,000. And let's just say, for instance, 5 years into the property, they go and sell that house and they're buying another house. when they go to sell that house, they would owe back $7,500 of that $15,000 original amount. So it's forgiven at a 10% rate per year.
I see. So with the rates expected to drop, you would, if you did want to refinance, you have to be cognizant of the fact that you may need to repay a portion of it if you chose to refinance down the road.
Right.
Tell me about the areas that are covered under this program.
Yeah, so PHFA, there's a couple things with it. So the area is all of Pennsylvania. And depending on what county you're located in, depends on the income limits. So there's income and purchase price limits. Typically, purchase price limit is not something we're up against too much. It's more the income limits. So, in Chester County, Montgomery, Bucks, Delaware County, the suburban Philadelphia counties, it varies between 114,000 and 131,000 for the income limit. So depending on whether you're a two-person household, it's 114. If you're a 3 or more person household, it's 131. It's a little bit higher in Philadelphia, but as you get further out into, say, Lancaster and Berks counties, it's a little bit lower.
Okay, and that is different from the Borrow Smart program. You must include everyone in the household, correct?
Correct. So, yeah, the big difference is, if that same scenario, 150,000 and 150,000, just on the one borrower alone, they're over the income limit, but you have to count everybody in the household. So, as a different example, if it was, let's just say, 60,000 and 60,000 on the two, husband and wife, if they have a kid, they're okay. They're a 3-person household. They're under the 131. If they don't, they're over the 114,000 limit. But also, let's just say, for instance, if a parent is living with you that collects Social Security and they collect 24,000 a year, we have to count that as well too, because they're part of the household.
And are there any special things that a borrower might need to do to qualify for this?
No, not really. I mean, the main thing is you have to do a first-time buyer certification, which you also have to do on the other one, just a little bit different certification that you have to do, but both very easy. But other than that, it's just the income limits. The credit score is also 620. So there's two different programs. So there's the grant funds. There's also a program that has a below market interest rate. It's about 1% lower than the market, has no grant funds. That one you can be as low as 620, but if you do the grant, you have to be 660 or higher to get the grant money.
Important to know. Well, the good news is there are opportunities to get some free money, if you will, as long as you qualify. Jason, tell us, when you first meet with a potential home buyer, isn't it true that this is like any other thing? They're going to make sure that they fit a program that meets your needs, and this is just one of those typical things. Right. Tell us about Guaranteed Rate and your background.
So Guaranteed Rate's a top 5 national lender based out of Chicago. I've been working for them for close to 8 years at this point. Best place I've ever worked. Very smooth process. We have things such as like a same-day mortgage where you can get an approval within hours, let alone days. And we're considered a mortgage lender, so we have control over the underwriting, processing, the whole front to, beginning to end of the process. So it's a great company, and we have programs like this and many others that when somebody reaches out to me to get pre-approved, the first thing to do is see, do you qualify for any first-time buyer programs? Do you get any grants? Things like that may or may not work for people, but something we're always going to check.
Absolutely. And I've worked with Jason a pretty long time through various companies that we've been in. So I can assure you that he gets you to the finish line smiling all the way. So thanks, Jason. If you're interested in any more information, we're going to put Jason's contact information in the notes below, and your link to apply if you're interested in a pre-approval. And thank you, Jason.
You're welcome, man.